Hello, I'm Grace. Key indicators of the U.S. economy are signaling positive momentum all at once, injecting a powerful sense of relief into global financial markets. Following the recently released Consumer Price Index, CPI, the Producer Price Index, PPI, has also shown a downward trend, suggesting that inflationary pressures are easing. The slowdown in price indices, coupled with a simultaneous decline in international oil prices, has served as a decisive catalyst in reducing cost burdens across the market. Buoyed by this stabilizing inflation, the S&P 500 index has hit a new record high, while the Nasdaq also demonstrated strength, rising 0.8%. Market attention is now shifting toward the Federal Reserve's monetary policy, with the futures market exhibiting very specific movements. Currently in the U.S. futures market, the probability of a rate freeze in September has surged to nearly 70%. This indicates that market participants believe the Federal Reserve will be relieved of further interest rate hike pressures, based on the current trend of price stability. Compared to the aggressive tightening stance seen during past periods of high inflation, current indicators provide sufficient justification for maintaining steady interest rates. The simultaneous decline in both inflation and oil prices suggests a virtuous cycle where falling supply-side costs lead to demand-side price stability. This macroeconomic stability is acting as a key driver in removing uncertainty and restoring investor sentiment. The optimistic market atmosphere is rapidly spreading to the technology and semiconductor sectors, driving up the stock prices of related companies. In fact, as expectations for artificial intelligence semiconductor demand resurface, SanDisk recorded an explosive surge, jumping 14%. The ADR, American Depositary Receipt, of the South Korean firm SK Hynix also rose by approximately 7%, proving the potential for a recovery in the global semiconductor industry. However, further data verification is required to determine whether the current upward trend is a mere technical rebound or a long-term structural shift. Ultimately, whether future economic indicators support the current trend of price stability will be the final variable in interest rate decisions. At this juncture, close observation is required to see whether the market's high expectations align with the Federal Reserve's actual policy decisions, or if new variables will emerge. I'm Grace, thanks for watching.